I want to get on to a little bit of a bearish news for gold. And I know India's been a big buyer, supposedly, of gold for a while, and platinum, silver. Now they're stating the opposite is coming on true. But this is not going to be all about bearish news because there's a lot of bullish news out there for gold and silver. Bonds in India, bonds are beating gold for funds on slower inflation rates. So basically, they were holding gold as a hedge against inflation. I know it's not exactly correct to do that mindset, because sometimes it's purely a speculative play, but also everything that's out there that's a financial instrument backed by the government is just backed by the full faith and credit of the government, not backed by anything material. So people are getting smart going into real physical assets. Actually, that's the reason. I just want to repeat that I do understand, what the reason is for holding gold and silver. But, as a person thinking in the short term, right now, investors in India are shunning gold while adding to holdings of government bonds, betting the policymakers in the government will cut borrowing costs as inflation slows in at least 2 years. So what they're saying is they got to change, and this just happened actually. Gold imports by the world's biggest buyer, which is India, may slump 48% in the 3 months and the first quarter of 2012 as compared to the first quarter of 2011. That's according to the Bombay Bullion Association. So that's bearish news for gold. Demand for gold in India may fall by 25 to 30% in 2012. Now, take all these stories with a grain of salt because things change rapidly. If there's further debt downgrades of European debt in the United States gets downgraded, the situation's going to change completely. That's just what's just going on immediately right now. Now, conversely, China, according to the story from Bloomberg, January 13th, Friday the 13th, good day, lucky day. China's hoarding gold, and so it's turning traders more bullish. Now, gold obviously has to go up with silver. You're not going to see silver just take off and hit to $60, $70, $75 an ounce in 2012. I totally disagree with the people that say it's going to sit and be bearish all year. Totally. And it's not just my opinion. I see too much going on in the world markets where there's too much uncertainty. Now, you're not going to just have silver take off all by itself. If it gets way the hell ahead of gold, I'm going to actually sell some physical off at that point. With the I'm buying some physical right now, so I'd have a seriously pretty good gain. Say if it goes up to $75 an ounce, I'd sell whatever I bought off now, and just wait for a pullback. That's all. Why not take the best advantage of the situation, but not risk too much in playing out your strategy? That's the way I look at it. Gold traders are more bullish in 2 months after mainland China imported the most metal ever from Hong Kong, and investors bought U.S. bullion coins at the fastest pace in more than 2 years. So 18 of the 23 surveyed by Bloomberg expect gold to gain next week. Now, if you believe that, you should be in double leverage gold. And you know what? I don't know if I'm going to jump right in there right now, but I'm going to be playing some of the double leverage markets in oil and silver. But only when I see seriously hard pullbacks. And I'm keeping core holdings, and mainly I'm in physical. The highest. This says that's the highest proportion since November 11th, 2011. Mainland China imported almost 103 metric tons in November 2011, valued at $5.4 billion. So the U.S. Mint said it sold 85 1,500 ounces of American Eagle gold coins in the first 12 days of January 2012. Full month sales would reach 213,750 ounces of gold at that pace, the most since December 2009. So there is a lot of physical buying going on. And I did mention something about Iran, and this is just my thought. I know that their dinar, the Iranian dinar, has lost about half its value since 2008 against the U.S. dollar, not against gold. I mean, if you're comparing the Iranian dinar against gold, it's probably 25% of the value. So you know what they must be doing. But how would you get that kind of information as to how much physical gold and silver and platinum and palladium buying is going on with the biggest investors in Iran? How would you get that information? I'll bet you that's not posted anywhere on the internet. But a little common sense says Iran has to be a major influence on bringing up the physical prices of the metals too. So, you got to look at all kinds of angles. I can't pull up one fact on what they're buying, but I figure they have to be. Could you imagine holding, when you're talking U.S. dollars, what the price of gold did in the last, since 2008, and considering that the Iranian, I got ahead in my mind, I'll keep thinking of Iraqi dinars, because there's been a big speculation about Iraqi dinars over the last so many years. I keep saying Iraqi dinars. I'm not mixing the two countries up. But the Iranian dinars, since 2008, have lost half the value against the U.S. dollar. About half. So anybody who has money to invest has to be going into gold, silver, platinum, and palladium. They have to be. It's a no-brainer. You just don't know what they're buying. You have no idea how much they're buying. Those statistics are not available, but you got to figure that's very bullish for all the metals. So the more sanctions they put on Iran, trying to destroy their central bank, the more it's going to be bullish for the metals. Just thinking about the numbers. So, got to look at all the angles. Talking about with bullion raised up and stuff, China overtook India in the third quarter as the largest gold jewelry market. And you see that's quite obvious because it looks like, according to that article I just pulled up today, India is not buying as much gold as they were, in past history. So the gain in imports from Hong Kong may be a sign that the central bank is adding to its reserves. According to Sharp Pixley's Norman, the People's Bank of China last made known its gold reserves at over 1,000 metric tons, more than 2 years ago. Now the United States has over 8,000 metric tons, but it's policy in China to buy as much gold as possible without upsetting the markets and trying to get the physical stuff as cheap as possible. So obviously the Western elite or Western banks are, I don't know, I think they're screwing up. I totally think they're screwing up because by holding down the price of gold and silver, people have the cash to buy and the reserves to buy it, like China. They're going to continue to increase their holdings, and that is the real money. That's the real money. So what you're doing is giving it to them cheap. It's almost like a lot of things that go on. I don't think they outsmart themselves. This was an article about oil. Now, I think the two commodities I'm going to really play the most is oil and silver. And looking for more pullbacks. And since it's 2012, I didn't think about doing platinum, but I should have. But the double leverage fund they used to have doesn't exist anymore, so it wouldn't have been that big of a play anyway. But I would have took it. Oil dropped to a 3-week low after European Union officials said an embargo on Iranian crude imports may be postponed for 6 months. Now, to me, that flat out means that Israel is going to attack Iran, to me. I don't know when. It's not going to, I'd say, if I was going to say pinpoint a time, it's going to be this spring, like in March, April. That's as soon as the weather is good enough for them to do it, they're going to do it. And whether you think this should be done or not, I'm going to point out here that people who think that Iran is not trying to get a nuclear weapon are so far off base, and I'm going to tell you why again, because it's another video. I've mentioned this before. Iran is sitting on so much natural gas and crude oil per capita, more of that per capita than anybody in the world. They are, they are producing most of their electricity from natural gas, and they just burn this stuff off. I mean, they got ridiculous amounts of natural gas, and they don't manage their energy as well as they should, nor do they manage their electrical infrastructure correctly, because there's a lot of waste going on. They are getting an infinitesimal amount of electricity from nuclear energy. They are definitely using this in a shrewd way to get ready for nuclear weapons, or clandestinely make nuclear weapons. No doubt about it. They are arming themselves to the teeth from Russia and China. So, I don't know what the heck's the matter with our elite, because they're not very convincing to the American public in general. And I know about the Shah of Iran, and as a matter of fact, I don't want to say anything else about that, because some people that I know are connected. Well, I was doing business, not me personally, but somebody I knew was doing business with family from that was from that Shah's family, trading. But anyway, they're talking about this ban on oil would have to be delayed another 6 months. Flat out, that means Israel is going to attack Iran. So if you're actually long in oil, you're probably good. So I'm going to always hold this holding, even if the oil goes down. I mean, there's nothing I can do about that. But I don't know. It's too risky that you can't not keep a core holding in oil. Nothing like double leverage, but just a core holding, because I think the geopolitical events are too hard to predict, and something could happen right out of the blue. So you don't want to miss out on it. The U.S. Joint Chiefs of Staff General Martin Dempsey said on January 9, 2012, that Iran can temporarily choke off the waterway. About 17 million barrels a day pass through the straits, according to the U.S. Energy Department. Now you figure what compare that with Libya. That's like many times more than when Libya produces as an entire nation. So they're less than 2 million barrels a day, and that's exports and what they use domestically. Oil prices would rise to about $150 to $200 a barrel if the strait is closed, or they can plunge to $50 if the global economy worsens significantly. Now that's something I think is going to be happening this year. You're going to see oil move up and down radically, and you might see this stuff with silver too. You might see silver move up. I don't know, but you might see it break its all-time high, go to $54 or something like that, then pull back hard to down to 40. I think there's going to be a lot of volatility. So if you're in any kind of electronic markets, you'd be well advised, if you get some serious gains, to get the hell out and at least half of it, or pull it out in increments. I don't particularly like stops, because sometimes if I feel the trend is strong in the short term, it has a way of bouncing down to stop you out and bouncing up. So I like to pull out in increments of 20% or 30% of the holdings. That's the way I do it. It usually works out better that way. You play a little conservative. The U.S. and our European allies suspect Iran of using the program to develop atomic weapons. I don't think that's a suspicion. I think that's a guarantee. It's just that most people aren't convinced. Now, you could say, why shouldn't they have atomic weapons? You know what I say? everybody in the world over in the Middle East is going to want atomic weapons if Iran has it. If Israel wasn't even over there, they'd be all fighting each other. And there goes your oil anyway. So, I don't think Iran should have atomic weapons, period. So, there you go. Oil gained as much as 1.1% earlier today. And this was that Nigeria problem, because Nigeria is a big oil producer, and actually that's one of the OPEC nations, one of the few OPEC nations that the United States imports oil from. And they had a problem with the Nigerian labor unions, and they're going to continue to strike, they can actually shut off all the oil going out of Nigeria. And we import over 600,000 barrels a day from them, so that's a lot. They're talking also about what the analysts thinking about the forecast for oil. They're thinking it's going to decline from now through January 20th. About 60% of the analysts, and about 30% of them predict the prices will increase, and a few just said there'll be little change. I think the price of oil is going to decrease. I think it's going to decrease because of this news about Iran. The only thing I think that can actually knock the price up is something going on in Nigeria. Now, I don't think that's going to happen because the powers that be don't want it to happen, I think, right now. Because Iran's selling oil, right? They don't want the price high. So here's another way to screw Iran, because this is how they screwed Russia basically back in the 80s. They dropped the price of oil. That's what collapsed the freaking Russians, whatever you want to call them. That's what collapsed them. Price of oil. So another angle on this with the sanctions could be, you want the price of oil low. And Iran doesn't have too many customers, right? I mean, they're still short. There's less places where they can market their oil. China can really cut a deal on that stuff. So it's a very difficult card game that the elite are playing, because when they try to hurt Iran, that benefits China. So it's a very, very tough game to play. But I think the price of oil is going to be dropping. I'm still going to keep my core holdings because they don't really erode. The oil goes back up to $100. It still stays about the same it always was. The double leverage stuff I don't like. But as far as some of these other things going on, this is the oil price again. I think they might, depends on what's going on. I'm thinking it's going to definitely go down about 95, 96 as things are looking right now, and possibly lower. And it could be just to break Iran. That could be something else to it. The euro took a big hit today. Now there's probably going to be some more downgrades coming up on some of their debt today, or tomorrow, or Monday, and this is possibly the reason. And that also affects the price of silver. But I noticed it hasn't affected the price of silver as much as it has in the past. But I'm going to be watching oil and silver. Now, if I see silver drop down to some level like this again, I didn't like doing this because this was still in 2011. But if it happens this year, I'm going to be buying AGQ, double leveraged. And as soon as I take a decent gain on it, I'm going to dump it. That's the way I'm going to play it. So, I think anybody would have, I think most people, the way you play this game is winners and losers. So I just want to win. But that's what I'm going to be doing. If I see this stuff drop down to some crazy price like this again, 2012, I'm going to buy AGQ. If I see some crazy gains, it's gone. And that's even in a week. So that's the way I'm playing it. It's a new year. I can do what the hell I want, so I'm not worried about it. So I'll play both markets, and I am only in physical silver, but I'll take any kind of money I can get out of here. But I don't buy stuff until I see what I think is a super, super deal. That's the way I do it.